Hey guys, welcome to my channel, Mindful Investing. My name is Sean. If you are new to retirement accounts, check my videos that talks about retirement accounts like IRA, 401k, and health saving accounts. Please check into that video in my channel. Alright, so today I want to talk about how I tripled my money in Roth-IRA in 2 years. This is my 5-year-old account, and I have been contributing every year to that account, and I was able to make some meaningful progress last 2 years with my dedication and my experience, right? So I want to share that with you. And good thing about Roth-IRA is you don't have to pay any taxes on the gains when you take it out after 59 and a half years old, right? So that's really helpful. And still you can keep investing on the good companies that you like and you see the future, and obviously it will compound over the time. And you might ask this question, right? Can anybody do this? Yes, I think we can all do it with the dedication and if you put your effort on it, right? So I will also talk later in the video, how do you achieve this? Is it sustainable long term? How can you get started on that journey? All right, if you like this video, please hit the like button and please subscribe to my channel so that I will bring more videos like this in the future. All right, let's dive into what is Roth-IRA. This is like a summary. Basically, it is an individual retirement account that you can contribute after tax income, right? So after you pay the taxes on the income, you can contribute to this account. So other distinction is you can withdraw the account when you reach 59 and a half years old, and you don't have to pay any taxes. Another catch is you don't have to pay any taxes on the whole account, right? But you can withdraw your contribution anytime. So let's say you have been contributing maybe 5,000 per year, and by the 10th year you are contributing like 50,000, and let's say your account has reached 100,000, you can withdraw the 50,000 without any penalties. You don't have to wait until 59 and a half years old. Basically it acts like a saving account for you, and you can always use that money for some emergencies or something like that. For the details, please look into my other video that talks about it in more detail. And currently there is a $6,000 limit per person per year as of August 2020. All right, so let's get started on the next page. So how did I achieve this, right? Basically there was two factors. One, investing, and other is compounding. Okay, let's talk about a little bit about this investing and compounding in next couple of minutes. First thing, investing, right? So investing is basically finding good companies that and you know if they have very good balance sheet where they can fund their growth next few years or next 5 years or next 10 years. And you also feel good about the management, listening to the conference call that they do after the quarterly earnings report. You can also predict the future. I mean, nobody can predict the future, but you can guess they're going the right direction, right? So that might be also one of the clues that that can get you about the future of the company. And you can also looking at the the various ratios like price to earnings, price to sales, and the growth projection. You can do some meaningful risk reward calculation and invest, and you will get better with experience, right? So much earlier you get, much better for you. All right, let's talk about compounding. This is my favorite thing, and not for me only, or for our greatest scientists of the generation, right? So Albert Einstein, he said compound interest is the eighth wonder of the world. He who understands it earns it. He who does not pays it, right? So basically, if you are investing and gaining interest on your money, and you keep on investing all those money that you gain on the interest, and you can keep on compounding that, right? So that is really a good thing. But if you are not investing, or if you are just uh, saving it without investing, and you have to eventually pay the price to it, because somebody else is making the money off of your money. It's just really important thing to understand. All right, so let's do some basic example of how the compounding works, right? It's really helpful. I went to this investor.gov, where it has a very good interest calculator. So let's say my initial investment is like $6,000, and my monthly contribution is around 500, and length of time I want to invest is maybe let's say 10 years, right? And estimated interest rate, let's say if you're prudent and make some good judgment and make investment, you easily earn 10% per year. And let's say you're compounding it annually, right? So let's calculate what is your future worth. And look at this for a chart, right? So the green one is your contribution. So you contributed about 111,000 by the 10th year, but look at that money that you contributed 66,000, right? So but the money went up to 111,000, so you gain basically 50,000 or more on that money. And you can see the the gap between your contribution and the compounding money is widening. The more early that you start, much better. And and also if you are prudent enough, and if you are investing in right companies, you can always increase that gap much wider. Let's say you are making like 20% per year. That's for that's an example. Let me put it here, and calculate it again, right? That money became almost double, and more than double, right? See that the contribution is 66,000, and it became it went up to 200,000 easily. So this is really important. If you can increase the number of gains per year, or if you can increase the number of time that you want to invest it, that makes the results significantly better. So much earlier you do, much better you get into that position. Okay, let's talk about how I did it, right? So about 5 years, my account was static. I gained like couple of thousands, first 2 years, and last couple of thousands, and third year I was gaining. So the account did nothing first, like few years. So I was not able to do meaningful progress on my Roth-IRA account, because I was new to the market. I didn't know what I was doing. I had to read a lot of blogs. I had to read a lot of investment hedge fund investment portfolios, and how they are investing. The different things I had to do. Obviously I made mistakes and learned from it, and I found some companies that were very cheap and compared to compared to the future growth. That was helpful to get me on board on some of those companies. I also some good upside potential, and I doubled down the profit from the winners to other companies that I saw that has more growth opportunities than I had currently invested, right? So that helped me a little bit to mitigate to that process. Obviously you might have questions like, what companies did I invest, right? So I'll just give you like few examples that I invested, the companies that I invested, right? So first one is Carvana, right? I'm not sure if you guys heard about this company. Basically they have this car vending machine. Basically even though they have this car vending machine in this multiple cities, they usually do online car used car sell business. They deliver the car to your home, or they can even pick up the car that you are selling, right, to them. Basically it is pretty intriguing business, but it was not easy though, right? How I invest. Let me show you a chart. All right, look at the Carvana chart. The ticker symbol is CBNA, And look at this chart, guys. It went from $9 to $218. It seems like easy thing to do, but it's not. And I even didn't invest, not invested currently in this company at all. But what I did was basically, and I was new to the market, and basically I was able to read through the ups and downs of the company, and I was able to pick the bottom, and I was able to make some gains on that. So basically this company was $65 around end of 2018, and it went to $30 start of the 2019. So there was like some news came from the short sellers telling the management were cruel. They are like pumping the balance sheet with the fraud processes or something like that. So it was like taking a hit, but I was seeing companies was getting more traction. I said the sales will definitely be there, even though they were hiding something, if the short sales were even true, right? So what I took a risk of investing on this company. Started investing around $40, and I doubled down when it went to $30. So I held into my position, and I sold around 70. So I almost made double of my money in that company. But I exited soon because I was not comfortable because of that short seller news. That's the perspective in the market, right? So I was doing that in Roth-IRA, and I didn't have to worry about paying taxes, right? So I was able to sell that company, and I was able to invest into something else, right? Okay, the other company that I invested on was Under Armour. It was going through the difficult times back in 2016 until 2019. So the shares were up and down. So back in 2019, I saw the management were doing really good things, but the share went down like around $15, and I invested in around that price, and I wrote that share until it got to $22 or $25, and I made significant money out of it as well. So let me show you the chart as well. So here's the chart, and you can see back in 2018 there was some bad news came out, and the price of the share went from $22 to $15 in matter of month, right? So I invested some of my gains from my other companies, and I invested around $15, and I wrote that share until it got around $22. So I made some good profits off of it as well. So this is a couple of examples that I want to share. But there are other companies that I also invested. It'll be more tedious, but I just was giving you some ideas, right? How I did investment on those companies. All right, the next company I invested was Tesla. The Tesla stock was beaten hard last year. It went down until $200. So I was buying the portion of it from $300 until like $200. So my average cost basis was around $250, and I got lucky because I was seeing what the short sellers were talking about. They were negative about the companies, but I was believing the companies will rebound because I was closely following the company. We were doing really good, building the China factory, and also their sales were improving, and I definitely was following. The cars were amazing, right? So I invested in the company, even though I don't currently have that shares, but I wrote from $250 cost basis until like $600. I sold all of it in $600. I almost like made almost more than double on that investment. So that helped me quite a bit to triple my money on this Roth-IRA. And there are always a lot of opportunities in the market, because market is make it right over time, but sometimes there is inefficiencies in the market, so that gives you opportunities where to get where you can invest your money. So if you want to know about more of those companies that I'm looking for, please let me know in the comment below. I will make some videos about it in the future. So you can do your research and invest in the companies that and you see the better future, right? So please go for it. So basically, let me summarize. How do how do you achieve this? Basically, there is no way than investing, because let's say if you want to triple your money on your savings, how much rates you get? Like 1%, 2%, not even that right now, right? Because of the Fed lowering the interest rate. Currently your saving accounts, like online, even the online saving account, that gives you 0.5%. That's very less, in grand scale of things. So in investing is the only way. And other thing is validating your process, whatever you are investing. I prefer to write some notes about the company that you were invested, so that why you invested in the company, and whenever there is a downturn, you can always look at the notes, if that is still valid with those macro environment changes, right? So you can make good decisions on that portfolio. And also repeating these processes again and again, you will get there. And many ask this question: is this sustainable long term? I think absolutely yes. With the consistency, with the experiences that you put in place, and the effort you put in place, you can absolutely do it. And let me tell you one thing that not many people talk about. It is easier for a smaller investor, retail investors, than big investors, like who have to invest billions and billions of dollars, right? It is very difficult for them to get into the market and get out of the market. For retail investors like us, it is easy, as long as you know what you are doing. Okay, just keep that in mind. So how do you get into this journey, right? So basically, you need some investing money, so you have to obviously save, cut your expenses, right? And second thing is, you still need to learn about yourself, like your risk potential, how much risk you want to take in the market. And other thing is, you can always learn from others. So, and other thing about learning is, you can, in current internet world, you have tons of resources in the internet. Either you can go to Reddit, where you have various forums where you can participate in and understand what they are talking about over there. You can either go to Twitter, where you can follow some of the greatest investors and learn what they are talking about. And also you can do your own research, right? So there are like a lot of places where you can research the content, research what the companies are actually doing, and you can make sense of it. And you can also start learning how to read the balance sheets, how to judge the value of the company, right? So there are different things, because it is like a cumbersome process, if you want to do everything like in few days. But over time, if you start investing and learn about it, you will get much better, right? So that's a learning process. Nobody's perfect, so everybody's learning on the investing side. And hula, you'll have a lot of money that that you can use for the things that you want to use in the future, right? So right now, please make a goal to invest and and increase your money, so that can make a better use of money in the future. You can have your money work for you, right? And it can give you more peace of mind in the future. So that's my take on this. Please hit the like button if you love this video, and please let me know if you have any other questions in the comment section below. And please don't forget to subscribe this channel, so that I can bring more videos to you. And I will see you guys until next time. Please take care, stay safe.